Hello, today in this video I will teach you traders how to buy from here. With a sniper entry and small stop loss. This strategy is so simple you can learn it in a day if you know the basic of trading. Also, I will teach you to make this kind of trade with only sniper entries only. So if you stick around you will learn everything in one video. And I will also make sure that I don't waste your time watching a long video that will take time to share some trading secrets. If you are also wondering, you can sell here using this trading strategy. We can also see that most of the time the trades are all sniper entries. And this will be the most simplest trading strategy video without using any indicator on YouTube. And finally, you will learn to make this insane profits in the forex markets. It also work on all markets like forex markets, indices markets, cryptocurrency markets, even the stock markets. The one question that I received from the previous video was, which time frame can I trade? It works on all time frames like the 1 minute time frame, 5 minutes time frame, 15 minutes time frame. This can also be used for scalping, and you can also hold trades for longer period of time because we will be risking less on every trade. So today is the end of taking trades that are having bigger stop loss. This is what you will learn from this video. 1. You will learn to make your own signal. 2. You will understand the market structure easily. 3. You learn how to make an entry. 4. You will learn to how properly place a stop loss and take profit. And I will also add some examples at the end of the video and explain each example. This trading strategy has helped me to pass more than 5 trading prop firm challenges in one day with only one single trade. This is the trade that I took on FTMO account. The metrics in the description below will show you how I passed it with only one single trade. That was properly managed to the T. As you can see from this chart, it shows that I had only 2 losses, which was managed correctly. Then one single trade made me to pass it. Now that we are done explaining that, now let's begin with this trading strategy so that you can also do the same. In this section of the video I will teach you guys how to draw supply and demand zone in the simplest way so that you guys can understand. The first step is to identify an engulfing candle on a chart. For those who doesn't know what is an engulfing candle. An engulfing candle is candlestick that is bigger than the previous candle's body and also with momentum change. As we can see from this candlestick pattern, the bullish candle's body is bigger than the previous bearish candle's body. There are 2 ways to draw supply and demand zones. Now I will teach you how to draw a demand zone. On the demand zone we buy. And on the supply zone we sell. I will also show you to make an entry using an entry strategy. Also remember to take notes because this is going to be important for your trading career. So the example on how to draw a demand zone. We draw the zone on the previous candle's high and low of the wicks. Another way to draw the demand zone is to draw the zone from the previous candle's open and to the low of the bearish candle. Like on this example over here. And my advice to you guys is to use this only most of the time. Because it will give you a super small stop loss and high reward. Now pay attention because you will learn how to make an entry using supply and demand zones. This will also work in any market like forex, stock market and more. So before we can confirm our entry we need to see at least one bearish candle like this one. And sometimes there can be a multiple candles before we can see a confirmation candle. Before we can confirm our trade setup. Now that we have this bearish candle. For our confirmation candle we have to make sure that price didn't trade below our demand zone. Then the next step is to wait for the market to touch the zone. Then wait for the market to close with a bullish candle on the zone. By doing so we will know that our demand zone is very strong to trade at. Now that we're done with how to draw the demand zone and already know how to confirm your entry, then now I will teach you how to minimize risk in 3 ways. From this example we can see that we have multiple bearish candles going to the zone. Then the market closed with a bullish engulfing candle. So if the market closed with a bullish engulfing candle on the zone, if you want to reduce risk, you will place a horizontal line on the previous bearish candle's open. In that case the market is likely to come and retest that price area. So that will be our entry. Then our stop loss will be below our demand zone. This is entry type 2. If price on the zone close with any candlestick that is not an engulfing candle, we will now put our buy limit order on the open of the bullish candle close. Like from this example. This will mostly give you a better entry. And mostly it will be sniper entry. The stop loss doesn't change from both entries. The stop loss will be below our demand zone. Before I show you How to draw the supply zone. I want to teach you something that you should avoid. So if price on the zone spiked below before confirming our entry, this will make the whole setup to be invalidated because there will be no way we could put our stop loss. So even if the confirmation candle spiked below the entry, then we will just leave that market and move on to other trading pair that will confirm our entries without invalidating them. Now moving on to the supply zone. On supply zone is just vice versa of what we did in demand zone. On all of this example I drew the zone from the open of the previous candle to the high of the wick. What I mean is that I drew the zone on the bullish candle before the bearish engulfing candle. From this example here on the bearish engulfing candle entry is the same way on how we did on the demand zone entry. So from this example we just wait for the market to close with a bearish engulfing candle on the supply zone. Then we will put a sell limit order on the bullish candles open. Then the market might come and retest it to trigger your entry. On the second one, if the market doesn't close with a bearish engulfing candle on the zone, we will let the candle to close then. We will put our sell limit order on the bearish confirmation candle on the open of the bearish candle. Like I said before, this will give you a lot of sniper entries. On the third one is just the both of them, but this time we don't need to wait for a retest, we just enter with calculated risk. Because sometimes the market doesn't retest. But if you are smart enough you can enter at the close as your first trade. Then put a sell limit order for in case if the market retests to trigger your second trade. Then lastly, before we begin with the trading strategy of the video. Now this is pattern you don't want to trade. As we can see the market spiked above the supply zone. So this will make the whole pattern or signal to be invalidated. So if you like the video so far, please consider giving this video a like as it will boost the video to reach more people. Now on this section we will learn market structure. When the market is bearish we will mostly see new lower lows and new lower highs. But when the market breaks the last lower high, this high here, to make a new highs without making any new lower lows, is then we can predict that the market is likely to be bullish. Then the next step is to check if the last lower low is having demand zone candlestick formation or not. If the market is having that, then we will just draw the zone like how I explained in the previous section of the video. And remember, we only trade what we see, not what we think. Because there are other trading pairs that we could check to see if we can get a signal or not. Your preparation to the signal or a trading plan should look something like this after we have drawn the demand zone. Then on the next step is to wait for the market to come to the zone and let price action candlestick confirm that we will go up or not. Now we can see that the market is in the demand zone. And we can also see that we have a bullish candlestick to confirm our trade setup. Then what we need next is to make some calculations on our trading account so that even if this trade doesn't play out, we can still try another one. But is likely to win most of the time. Unless if the market doesn't confirm our zone. For bearish signal setups is the same as the previous example, but vice versa. Here we can see that price is just bullish. But the only problem is that we can see that the last high low is broken. So we will do the same steps over and over again. And this trading strategy can also be used for continuation. If the market is bullish, we still try to find the demand zones on the previous higher lows. Step 2 is to wait for the market to retrace back to the previous higher high. Step 3. Check if the market is having any supply zone prior to the previous higher high. If not, then avoid the pair and move on to the next one. Or you can also go to the lower time frame to refine your zone. Step 4. Draw the zone and then wait for the market to close bearish. And also remember to have those sniper entries. You should be able to spot which candlestick pattern close at the supply zone. You can also leave a comment below if you didn't understand it. I will make sure that I make long form video for you to understand it clearly. And we can also see from here that the market closed with a bearish engulfing candle at the supply zone. Meaning we will only sell on the previous bullish candles open. If you don't know the open and close of candlesticks, then I advise you watch a video online to teach you about that. Because that is the basics of trading, then come back to finish this video. For those who use other trading analyses like support and resistance, this video can also help you to make better entries, and for those who use Elliott wave, then this video is very helpful for entries too. Like from this example, as we can see, we have a trend line that is broken. Then followed by a correction, or you can also call it flag pattern. Then what we need is to buy before the market breaks to the upside. So we will try to find the demand zone from the bullish move that broke the bearish trend line. From here we just follow the same confirmation steps. which is the confirm our trade at the zone. We confirm the trade by waiting for a candlestick to close bullish at the demand zone. And also make sure that the candlestick doesn't trade below the zone, because that will violate the whole trade setup. Now we start doing the hard part of the video. From this chart over here we can clearly see that it's messy, but if you remember to check what I have explained in the beginning of the video, you will understand how simple it is. First, let's check the lower high that is broken. Then we will also check for supply and demand zones for entry area. Now we can clearly see the low that is broken. We will then draw the supply zone, then we will also confirm our trade when price touches the zone and close bearish. When price touch the zone, then you will decide if you want to enter on the close or wait for retracement. From this example we can see that price closed with candlestick that is not an engulfing candle. So meaning we can sell or put a sell limit order on the previous candle's close. Please also take notes because this is very important. And if you don't understand anything yet, please leave a question below. I will respond as quickly as possible. So what happens if you miss the first entry? We just repeat the same steps when price action allows us to do so. So we can also see that we have two major lows that are broken. But on the first supply zone price did not confirm with any bearish candle close. Price just shoot higher. So that means we can avoid trading it there. That is why I like trading using this strategy, because it will make sure that you avoid entering the market at the wrong time. As we can see now we have another supply zone at the swing high. So if you were waiting for retracement, that means you could have missed this trade. And for take profit you can target previous lows. Or put the trade to break even and hold it for longer period time. In the future I will also upload a video on how to manage all the trades. So please make sure that you are subscribed to the channel so that you don't miss the next video on the channel.
Do it! Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow, so just do it! Make your dreams come true! Just do it!
This is how most of your trade setups should look like. When you plan, start by checking the overall trend of the market. Then make sure that we also have a higher high that is broken. This will help us to identify that our trend is bullish. Then draw the demand zone. And then wait for the market to come to the zone and close with a bullish candle. This will confirm our bullish signal. As we can see this setup here, the market closed with a bullish candle that is not an engulfing candle. Meaning we can put a buy limit order on the previous candles open. Or on the confirmation candles open. They are all the same thing. But if you go and back test you will see that in all the markets. Let's see this example over here. You will see some of the trades that you should avoid if the market doesn't give a lot of potential. Or if the stop loss if big. From here let's start by drawing the supply zones. So from here we can see that we have two zones, but only one worked out perfectly, but the target is very small. Now also study this chart over here. You can pause the video to just study and tell me in the comment below on what you see. I have left two hints on the charts. Now traders, I will show you one of my favorite setup of all time. This pattern will make you gain more profits if you can hold for more profits. So now let's start by drawing some trend lines. Now that we can see that we have breakout of the bearish trend line, we will wait for the market to correct over here. But then we also have to find the demand zone. Now that we have drawn the demand zone. And another thing I want to teach you is that the demand zone will help up to enter before the breakout. So when those breakout traders enter, with a breakout we will be in the trade and risk-free already for Incas if the market decide to reverse on us. Now we can see that the trade worked perfectly. And there is a way that I take profit from this kind of setup. So if you guys subscribe I will clearly see that you need it then. Now that we came to the end of the video, I have included some example at the end of the video. I promise this time it won't take me 2 months to make a new video. Goodbye guys, and also use proper risk management and use a stop loss and don't be greedy, always close your trades.